The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, not the best end of the week in the grain and oilseed trade, kind of a mixed bag in the livestock arena as well on Friday. Friday the 13th didn't bring us a lot of craziness in the markets, at least. That's a good thing, but not the jolliest of ends to a week that did see a little bit of promise early on, particularly in the corn market. Let's talk about it. Joining us for market analysis as we close out the week, Christy Van On. She's with Van On and Company. Christy, it's good to talk with you again. Merry Christmas. Thanks for being on with us.
Yeah, Merry Christmas to you. Yeah, I appreciate it every time. It's always so fun.
Well, as I kind of laid out there, I'm trying to lean into my Christmas spirit a little bit. Not a jolly, merry end of the week in this grain market. And you and I were chatting a little bit throughout the week, too. And kind of one of the things we talked about quite a bit was that magic futures number of 450 corn and $10 jam beans. It felt like that just was an area we could not get through. And I think from what I've heard, that invited a little bit of farmer selling here to end the week. Would you agree? What do you think?
Yeah, I would agree with that. So I just think that those levels are such key levels. So we obviously got a friendly USDA crop report this week. I thought you could see that number at some point. We had talked about that on the show earlier this week, that I think that corn carryout could get down to that like 1.7, 1.8. I was not expecting it to be there quite yet. I was thinking more of a springtime frame. The demand has been so high, corn exports were running 11% ahead of pace for book sales. And so when you have that, you're coming in here and saying, okay, what USDA did was justifiable. My concern of it happening now is that now they can have a buffer of saying, if we wanted to raise yield in the January report, we could get back up to that 1.8, 1.9, where if you would have had that demand increase come in the spring, you're already past kind of those final production numbers, it would have been a little bit friendlier. It was really disappointing to see how this market reacted to some bullish numbers. And I was looking back at the year prior, and the year prior, corn had a carryout forecast of 2.1, just over that. So 400 million bushel higher than where we currently are. And March of 24 corn was 485. And so you're looking at these markets and you're like, wake up, you're so depressed. But I think that is what we are dealing with right now, is that there's grain to be sold. We know that there were huge yields out there. I think that you can just see, obviously, from quarterly grain stocks reports coming into this year, then also from talking to end users, that the producers were not sold like they typically are. So there was a lot of grain they had to sell. So I think that is playing a role into keeping these markets depressed and not being able to really rally. And we need to look at the technicals. Technicals continue to become such an important factor of these markets and really can control a market, whether you get fundamental information that is friendly or negative. Technicals can still overtake all of that and say, hey, no, we don't care about that stuff. We're going to control that. And I think that's what you're seeing right now in the market, is that the March corn contract has touched the 200-day moving average a few different times, but has not been able to trade through it. Obviously, where the 200-day moving average was this summer is a lot lower now, but it still holds that same kind of resistance point. And we were able to get the friendly information, the fundamental friendly information, got up, saw some rallying, and I just think you had too many resistance points for the corn market. The best close, obviously, prior to the report, we came in there at that 440 close. But then prior to that, our best closes were 444 and 450 back in November and December. And then the 200-day moving average was at 451 and a half. So I'm not saying we can't get through it, but I was looking at the chart and I'm like, gosh, we need to find some sort of momentum to be able to get us through there. And we just were unable to do that. I think there's a lot of farmer selling. And I had those conversations with producers as well. I'm sitting here saying, hey, you are willing to pay 6 cents a month for storage right now on this corn. Why? We've rallied 30 cents take that 30 cents. And if you really want to think that this market is still bullish, go ahead and buy a call, but stop paying storage on a market that did its job for you. And you're coming ahead of where you were when you placed that corn in the elevator and started paying storage. So that was a conversation I had with a lot of guys and really advised them to come in here and sell that and stop paying that storage. And along with that, I mean, there's just a lot of unknowns around the market right now. So we need to pay attention to that. Also, on top of that, for the corn market, a lot of these places, you were not seeing any better cash price, right? I cannot talk about this and strongly enough, is that you have futures and you have basis, and you need to treat them completely separately. And if you don't, you have situations like this where corn was rallying, but your cash price really wasn't going anywhere because that basis was widening out along the rally. And we've had some very favorable basis in a lot of areas. But yeah, you just look through so many areas around here, really have seen that basis start to widen out, and that's just evident of the farmer selling. And you can kind of take that to the same situation as soybeans and talking about that $10 level. Anytime we got to $10, it just seems like some selling started to occur. My problem with soybeans is they don't have a fundamental friendly story behind them like the corn market does. There are a lot of friendly tidbits that you can pull for the corn market, especially when you start to talk about world carryout levels for corn. If you take China out of the equation, you started to see South America focus more on beans. So you're going to see that just natural decrease in production forecasted for Brazil. And so I just think that those stories are there, but it seems like corn doesn't really have a friend. And if corn doesn't have a friend, I'm afraid we're not really going to be getting anywhere.
Well, and I'm glad you mentioned this, that you have to treat futures and cash separately, because, real talk is I can get on here and squawk about how we couldn't get through 450 quart or $10 beans. And yet some people who just like to play the cash market game, they're looking at, corn right at the $4 mark or maybe $3.98. I saw a few people mentioning that to me here this past week, et cetera. So, you have tools in the toolbox out there. And I think the other thing too is that I've heard from some folks, it's more of a matter of, well, do I want to sell? No. Should I sell? Yeah, probably. And then you throw in the caveat of, well, can I hold out till January 1, et cetera? I mean, for the new tax year, there's a lot of things here. But to your point about it's a different conversation, cash versus futures, but you have tools in the toolbox right now.
Yeah, and that's one place I start with guys when they start to really want to embrace and take advantage of their marketing. Where do you start, right? And obviously, I'm a advisor, but I'm also a broker, right? So I think the natural start. People think I'm going to talk about futures and options. Listen, if you don't understand your futures, your basis, your spread differential that you have at your elevator that does not cost you any money, right, to be able to focus on those things and really get a grip on those. That is where your marketing plan should start. That's where the core is focusing on those aspects of your marketing. And then, like you said, your toolbox, coming in here and saying, hey, do I want to use some re-ownership tools? Do I want to use some downside protection tools? Those should be second in line to your initial cash marketing plan. And so that basis opportunity, I had a lot of guys that were presented this fall with a basis that wasn't the best, but they're like, hey, I will give you this basis for March, but I know it's not the best basis, but you won't pay any storage on those bushels, and you can price it out at any point between now and March. So there are a lot of those contracts out right now that I think are getting sold against right now. So it's all of those kind of tidbits put together. And unless we can kind of get a spark of something to drive this market, we are struggling here. And I think that there's a lot of fears about what this next administration will do about tariffs. And, sometimes it's uncomfortable to talk about that, because whether you love him or whether you hate Donald Trump, those are the realities that we have to progress forward with. And I do think there's something that we should be talked about, but they're not something that we should really focus on. And I do think that sometimes the market gets a little too wrapped up in those fears of what could happen versus dealing with what we have in front of us right now. And what we have in front of us right now is a market that was able to lift, 50 cents off its recent low and give you some opportunity to really make those cash sales and just farm another day, especially for those that are behind on soybean marketing, right? I'm not a big fan of soybean price. I also am really not friendly on beans. I think that the fundamentals are disastrous when you look at them, but treating that and saying, hey, I could sell some corn right now that's 50 cents higher than it was this fall. And that gives me a little bit more time to be a little bit more patient on beans. Same situation for wheat as well.
Christy Van On, she's with Van On and Company, joining us here for market analysis as we close out the week and look at Friday's action. And mentioning wheat, let's go there a little bit. You know, at times it's felt like wheat's been the leader in these grain markets here throughout the year. Yet this past week, I felt like wheat was kind of trading in sympathy with corn, whether it was higher, lower, whatever the case. It just felt like wheat's been drifting and lacking its own fundamentals, so to speak. What's your perception across the wheat trade looking at all three complexes right now?
Yeah, it is just struggling to really get anything going right now for wheat. It seems like no one is really concerned with Russia and Ukraine at this point. I also think on the flip side of talking about the tariffs and the concerns, you're coming in here and you're having some leaders already meet with President Trump and come and try and discuss how can we end this Russia-Ukraine war that we have going on right now. So I think all the premium is taken out of that. I also think you look at just the fix. I don't know if you really want to call it a fix, but the improvement on the drought monitor, that you're not having those really, really bad conditions that you have had in the past a couple months ago. What a couple months can do for that drought monitor is insane. So that has taken some of that premium out of there. And once again, we just don't have that reason or spark to be able to do anything here. And to be honest, like when you look at managed money, they're sitting in a position that's, okay, we're fine where we are. If we want to buy, we could buy. If we want to sell, we could sell, but there's no indication there. Where on the flip side, managed money is really long when you look at cattle and hogs. So that's where you can look at managed money and say, I need to be a little bit cautious. Cash is so strong for cattle right now. You've had that futures push in hogs, but that is an aspect where we need to be careful. Don't have that situation or give any hints when it comes to the wheat market. So I think wheat's a follower, but it just seems like it gives it a couple days, you get a couple good days, and then it gives it back, and we just can't get anywhere when looking at these markets.
Very true. Very true. Let's shift gears a little bit here. And maybe some thoughts on the cotton market real quick, if you have those. Down day again Friday. Cotton's been kind of interesting to watch too. I feel like that's kind of been roped up in this whole grain market holiday type of trade to some degree. But anything big you've seen with that cotton market right now, especially considering you talk about tariffs, China, cotton, etc. I mean, that could be a big deal there as well.
Right. So when you look at cotton, you've taken kind of the drought situation out of it, right? So if you asked me 2 months ago, I would have said cotton was one of those main futures that I'd really look at having a strong start to the first quarter of 2025. But since then, we've really taken that drought situation out of it. We've added in some uncertainty about possibly tariffs with China. Our export sales are dismal in cotton. So you talk about how strong they are in corn. They are horrendous when you look at it for cotton. So you don't have that going for you right now either. So there's a lot of concerns. The carryout has grown year over year for us domestically for cotton, that it just seems like there's not a whole lot of positive information, but it's holding its own. And I would say right now you could kind of lump cotton and beans together in a similar situation. Seasonally, cotton and beans are supposed to be a buy right now. So seasonally, this is a time frame to support these markets, but everything else is negative. And so that's that same situation. There's a lot of people that want to be buying beans right now, and I just have such a hard time with it. And I preached earlier in this that technicals can take over a market, and it doesn't matter what fundamentally is happening, but I have a hard time really buying into that when you have such ugly fundamentals for beans, and I would lump that in with cotton as well.
Let's look over at that cattle trade. I know folks there have been watching this market, continue to find good price action for the most part. End of the week kind of mixed, and some are wondering again, are we near the top end of cattle prices? I've said that I don't know how many times in 2024, and it just feels like it's never the case. So I'm probably going to eat my words here when I ask this question, but are we near the top end of cattle prices, Christy?
Yeah, it's like that freak out situation, right? Like it like kind of baits you in, and you're like, oh man, they pulled back. They were down like $3 last week. Like there's so much on the table that if they wanted to drop, we need to be part of this. But then they rally back and you're like, okay, never mind. We have our ninth live coming to us in these cattle markets. And so right now, cash is the driving force. The amount of calls that I take, and they're just like, I cannot believe what this cash price is doing right now. And it is so strong. And so I think that's that driving force. But then on the other side, like you said, some technicals are looking not so friendly. We're failing at some key levels. We have managed money very long that if they wanted to step away from the market, there's those concerns about what you could see as far as if you do put tariffs in place, what do we see for an economy? This Dow is just at record prices. Do you see the stock market be able to survive through this period? It's those type of things that could shake up the market. But as of now, as long as that cash trade is being supportive, these markets seem to want to stick around. That being said, I'm looking at this and being like, you would be stupid not to put some form of downside protection under these markets because of just the risk that you have in the market right now, the prices that you're paying, that if they slip, that's really disastrous. What I think is happening also for cattle is that you're looking at it and you're saying, corn's actually pretty cheap. So we're going to just keep on going, even though, you're buying these so expensive. The corn is cheap enough to keep things going. So I think I get nervous, but until it can really break down, I guess I'm just going to keep layering in some options, LRP, if you really wanted to look at that as well, and just putting a floor underneath these markets just because of the risk that's on there.
I was nervous about hogs here this week, but then it felt like after we kind of seen a correction, we found a little bit of footing, even though there's some technical pressure in this market. We found some footing to end the week. I know summer month hogs struggling to get back above the 100 level, though. And you look over at that hog trade, what's your feeling there as we close out the week?
Yeah, hogs needed a good trade today, and that's exactly what they did. So I think that when you look at the chart, they saved it. I think if you would have had a negative day today, I think you would have brought out so many technical sellers. And to be honest, once again, manage money. I mean, manage money is record long here in hogs, and you can lump hogs in with that talk with China and tariffs and those concerns that are out there. And so I think that's something that we really need to pay attention to as well. But today was a saving grace, and I think really supported that market.
All right. As we get close to wrapping things up, I want to throw this to you as well. We got a couple weeks left in the year. It's really traditionally going to get into that holiday type of mode. Lower volume can lend itself to some volatility, though. I know folks got holidays and family and friends and loved ones on their minds for gatherings, but this isn't necessarily a time to just, not pay attention to your marketing plan, so to speak. Right, Christy?
Yes, work the orders. I cannot stress that enough. Work some orders. Even if you think they're obnoxious orders, work them. It does not matter. Put those price levels in there and just step them on up. And I had that conversation with multiple people. I've had working orders at $4.49 off March corn for months. I mean, it's really been in there for quite some time. I remember when we failed here in November, we were like a couple pennies away from filling, and I was like, just fill these orders, and we never got them. Kept them working in there, and we're able to get them. And so I just think that's so important to have those in there, because you don't know what's going to happen. You have this active trade overnight, any sort of dynamic in the world. I know another thing, like everything going on in Syria. I just feel like this market has become so numb to news that sooner or later there is going to be a story that this market wakes up and is like, holy crap, what are we going to do here? So I just think it's really important to work those orders. When we look at the corn market right now, obviously 440 to 460 is that marketing target that we're looking to add some. I had a lot of working orders around that 449. I was concerned that we wouldn't be able to get through the 200-day moving average. So that's kind of where I put that first one. If we were able to get above the 200-day moving average and close above 462, I would be in the opinion that something bigger could be happening for the corn market. Until it does that, I'm going to say that this is the top end of the range and that we're stuck here for a while. Soybeans, a little bit of a different situation. I don't love $10, but I'm also not friendly on soybeans. So, it's kind of, can you make money at $10? The price points above that are like 10.17, so they're pretty narrow. But if you wanted to try and get a little bit more above that, working order around 10.17 is probably the target I would choose there.
Christy, always appreciate the insight and great conversation. If folks want to reach out to you there at Van On and Company and have a conversation with you about their marketing plan, how can they get in touch?
Yeah, you can call us at 1-800-648-5494.
Christy Van On, she says, with Van On and Company, always good to hear from you. I'll wish you and yours a Merry Christmas and a happy holiday season, and we'll talk to you again real soon.
Perfect. I appreciate it. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.